Good evening, everyone. I'd like to share a trade that I try to do in the mornings when I'm able to sit in front of the computer and day trade. This trade here is called the opening tick fade trade. It is used for a lot of times when there is a market gap up or down throughout the evening and then the overnight session. So if we're trading here and then the market falls and then we open sometime somewhere in here, this would be considered a gap down. And also, if the market gaps up throughout the evening or overnight session here and we open here after we've closed here, then that is what would be considered a gap up overnight. Now, that being said, that is a tradable event in the market when it comes to when the market opens in the cash session, which is 9:30 a.m. Eastern Time. So there is a certain way we can do this, and that is using the tick chart or the tick value. Okay, what is the tick? It is on the New York Stock Exchange. The tick is a market internal indicator useful for short-term trading. It is a very interesting market sentiment tool. The tick tells you the number of stocks on the NYSE that are increasing in price versus those that are decreasing in price compared to the previous price quote. In other words, stocks that are trading on upticks minus the stocks that are trading on downticks. So that is the NYSE tick chart, and it gives you a market sentiment of bearish and bullish. Very short term. I keep my tick chart on a 5-minute. For when I am day trading, it'll give me market sentiment, whether it is bullish or bearish. So that is what the actual tick chart is. And in TOS, it is right here, it is $ tick. Not 100% sure what it is on TradeStation, and I don't have any other platforms, so I know it is $tick on TOS. Alright, how do I use it? Like I said, my tick chart is set to a 5-minute chart. I have price levels drawn out on it, as you'll see in some of the examples. The price levels are plus 1,000 and negative 1,000. These levels indicate extreme buying and selling pressure in the market. If you guys ever watch the tick chart throughout the day, and we ever see pretty big pullbacks or what would be sell-offs, if you would watch the tick chart at that time, you will see that the selling or buying will be above 600 and up to and through 1,000, or below 600 and below or through negative 1,000. So that is how I use the tick chart. I do have renewable alerts right here. On my tick chart at plus 1,000 and negative 1,000 and renewable. By that I mean once the alert is triggered, it is set to reset itself so that if it's triggered again, it alerts me again. So I don't have to reset it every single time it's tripped. Because especially in these market conditions, the plus 1,000 and negative 1,000 ticks are tripped multiple times a day. So those are set to renew. And for the tick fade trade to work, you need an opening value of plus 1,000 or under negative 1,000. And I'll show you in some of the examples that I've got coming up here. But anything other than that, it does not seem to work as good. So you need those readings to be able to fade the market on the open. And again, if the tick value is above 1,000 at the open, and a lot of times what that is a gap up overnight. Your tick value will open above 1,000. That is an indicator to short the market at the open. If the tick value inversely is below negative 1,000, it is an indication to buy the market at the open, right at the 9:30 bell. Ding, ding, ding. And I will use the SPX for options, calls and puts, or buy and sell the ES futures. So that is how I use the tick chart. And what are we looking for? If I'm trading the SPX, I am looking to cover my risk with a leg-in strategy by selling the Next, further out of the money strike for equal to or greater than the amount that I paid for the long strike. And that is a whole nother video that I go over on how I leg into trades rather than tripping the day trading, pattern day trade rule that the SEC has set on folks with count values under $25,000. So that is a whole nother video, but I use the legging in strategy to cover my risk on these opening trades because a lot of times they happen pretty quick. And then if using futures, use a 3-point trailing stop or wait until the tick stops making higher highs or lower lows, whatever that would be, whichever way you're fading it throughout the open. And here would be some examples. Okay, let me get a different ink color here on the pen so you can see it on these dark. I have a dark background on my charts, so here's one example. Here is the 930 chart, or the 930 candle right here, and it opened, as you can see, with a reading of negative 1225. So this would have been a sell-off throughout the evening and overnight. So we opened at negative 1225, and as you can see, the ticks then made their way up like so until we got to this candle right here, and the high was 567. I'm sorry. That was the high tick reading for the day, or for the morning. I'm sorry, and that was at the 950 tick candle. So that is what the charts look like. These are my renewable alerts here and here. These are my levels right here and right here that are set at the 1000s, and then I have the 600 levels here and here. Also, because anything basically that sustains under 600 or above 600 would be sustained buying pressure. So that's why I have those levels on there also. And next we'll show you an example of a chart. Here we have the chart of that exact opening. This ticked the previous slide here that I showed you guys, where we opened at the negative 1225. This next slide is the ES on a 5-minute for that opening. As you can see, right here is the 9:30 a.m. candle right here. And this is a 5-minute chart, if I didn't say that already. And it says this is the tick fade trade at 9:30 a.m. market open. The tick reading was negative 1225 from the sell-off overnight. I purchased an SPX call and used the leg-in strategy to cover my risk. The ticks stopped increasing here when they reached a high of 567. So this would have been that 950 candle right here on the ticks. This would have been that 950 candle right there, which is right here. Okay? So that's when the ticks stopped reaching higher highs, which is right here. And that's when I would have covered or covered on the next candle somewhere in here after the ticks started dropping. So that is one example. Go to the next one, and here's another one where the opening was a negative 1347 right here. And then the ticks didn't stop making higher highs until here, which was at 9:55 in the morning. So, that being said, we'll go to the next slide, which is a 5-minute of the ES on that morning. And this was this is Friday, April 6th, 2018. So this was Wednesday morning, April 4th, 2018. And the ES rallied all day this day. It rallied all day. So, but as you can see, although the ES proceeds to rally all day, the opening tick fade trade was again a success. So the opening bar here, and then it didn't lose momentum until what would have been 9:55, which is here, and we did have this sharp decline here also. I believe that is exactly where that was. It's the 9:30, 35, 40, 45, 50, 55. 55 was actually the green candle here, but that's where the ticks started to stop making highs, which then proceeded to create this red candle right here. So that's when it would have triggered an exit from the trade. Even though the ES rallied the rest of the day, that's when the trade was triggered to get out of the morning tick fade trade. And those are two bullish signals. Here is a bearish. We opened the day here with a plus 1206 reading at 9:30 a.m. The ticks didn't stop making lower numbers until here, which was 9:45, right there. So let's take a look at the chart that is next, and we will see what that all entailed. Right here, the green candle right here was the 9:30 opening, and it did make a wick that was down well below where the candle finished, and then the ticks then took over, the selling pressure took over, and is what created this long red bearish candle here. And then as you can see on the screen, at 9:45, the ticks stopped making lower lows at this red candle that it is pointing to. Although the next candle made the actual low, the exit trigger was tripped here. So even though here was the actual low of the morning of what would have been the tick trade, the exit was triggered on this candle over here, getting you out of the trade. So those are three examples of how the opening tick fade trade works, especially in the volatile markets that we have right now, where you have large overnight gaps, which this works very well for. And then to summarize it up, I want to make one thing clear. This is definitely not a trade that you're going to retire on, okay? You are not going to retire off of this trade, all right? It is a scalp trade for the first anywhere from 15 to 30 minutes in the market. That's what this is designed for. Like I said, nobody's going to get super rich off these trades, but it is, however, one of the only times in the market that you can count on it happening an average of 4 out of 5 days a week. Especially in these volatile markets, this happens 4 out of 5 days of the week, and you can count on this trade coming through for you. So with the correct position size for your account, this isn't something where, okay, well, this is supposed to work 4 out of 5 days of the week. I'm going to take 25% of my account, I'm going to throw it into this trade, and I'm going to make it something I can retire off of. That is not the goal here. I do not recommend that. Yes, this is something that works 4 out of 5 days a week in a back test, and anything that we do in the market is done from history. So this is not to say that this is going to work every single day of the week, 4 out of 5 days of the week, but it has been working 4 out of 5 days of the week. And with the correct position size, it can be a steady way to start the day off on a winning note. It's something that I try to do to start the day off on a good note, get some positive vibes thrown throughout the day. And again, with the correct position size, if for some reason it is something that does go against you, it's not going to be a thing that's going to really sour your day. So again, it is something that you're not designed to retire off of this. It is not designed to retire off of. Okay, but it is again a great trade to put on in the morning to start your day off pretty good. So. That's all I've got for this trade. If you guys have any more questions, either watch the video over again or send me a message. But again, hopefully everybody has a profitable year of 2018 and the rest of April. And I hope everybody has a profitable rest of the year.